Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range, and our short-term bias heading into the open continues to be neutral because overall, over the last several days, the market has been fairly range-bound. Heading into the open, we have pre-market support at 83 to 85 and pre-market resistance at 91 to 93.5. Now, we are going to have to determine whether the market is showing any clear signs of strength or weakness off the open to determine our real-time intraday bias, since the market is in a very balanced state and our short-term bias continues to be neutral. So neither side is clearly dominant here, and off the open the market can really move in either direction. A break below 83 to 85 would signal short-term weakness and bring yesterday's low at 79 into play and the 75.5 to 78 initial support zone. Now this would be the second approach towards that 75.5 to 78 zone, so we do have to exercise a little more caution this time around and determine just the level of weakness and downside momentum that we're seeing. So for example, if the Russell is breaking yesterday's low and continues to liquidate, then we'll want to be careful this time around when ES tests 75.5 to 78, because we could get a continuation move lower. Now the time where it would make sense to still take the long at 75.5 to 78 is if the Russell is breaking lower, but then it's testing even stronger support, perhaps at the 1367.5 to 69.5 area. On the upside, we have short-term resistance at 91 to 93.5, and that marks the previous close, the previous VPOC, the overnight high, as well as yesterday's high. Now, in order to break out beyond 91 to 93.5, we don't necessarily have to see a very positive advanced decline, since the previous close is right there at 91. But we do need to see some sustained upside momentum. And if we are breaking out beyond 91 to 93.5 on some decent upside momentum, then we'll have to be cautious at shorting the 95 to 97 area. So that means only short 95, 97 at good location within the zone, and if ES is quite exhausted into it. So if ES goes up into the pre-market resistance and then starts to balance and then breaks out to the upside later in the day, then the 95 to 97 zone may not hold, and we could test even 99 to 2400. And given that it's Friday and we're heading into the weekend, the 99 to 2400 zone has potential to cap the upside. Beyond that, we have the 24-hour session high at 2403.75 from the May 8th session. So heading into the open, we have to continue to be nimble and flexible with our real-time intraday bias, just because things are very neutral and the market is trading within a balance area and within an established range. And until the market breaks out of this range one way or the other, we can't really have a strong directional view. And we're going to have to continue to be flexible and nimble with our real-time intraday bias. So those are the main thoughts heading into the open. Let's see if the buy side can hold ES above 83 to 85, and we'll take it from there.